Hello everyone, welcome back to my channel. This is Forex Solution Academy channel. So in today's video we are going to be looking at something very interesting. In my last video I showed you different type of traders which we have, but in this video I'm going to be showing you, we'll be talking on understanding Forex indicators. So we talk about what are Forex indicators, the popular Forex indicator for newbies, or the standing moving average, how to interpret RSI, you know the meaning of RSI, and also trading with MACD. We are also going to talk about all this. You know the meaning of MACD, what is MACD, what is RSI, what is MA. So we talk about this in this video. Just stay with me as we progress. Okay, so what are Forex indicators? So if you watched my last video, I spoke about different type of traders. So I spoke about technical traders. They either use indicators or they use the chart patterns, which are the price action traders. Good. So in today's video we are talking about those that use the Forex indicators. And what are Forex indicators? A lot of people have been wondering, like, what are indicators? But from the name, something that indicates, like, you know, there are some appliances we have that maybe give a red light just to indicate that, okay, it's working or something. Do you get it? So indicate from the words, like, shows, like, sign, like signal to us that, okay, it's time to do this, this is it. Do you get it? So but in this case, Forex indicators are powerful tools used to analyze currency market or Forex market. They used to it will just analyze the market for you, tell you when it's time to buy and when it's time to sell. So it's a visual representation of technical analysis. So whereby you don't need to draw lines, you don't need to do anything, and it derives from historical price and volume data. You just do the calculations, but I won't bother you with different calculations on how they arrive at how the indicator works. So we don't really need that, and it helps to identify trends. Okay, you know, in trading we have the upward trend and we have the downward trend. When the market is moving continuously upward, we call it upward trend. When the market is moving continuously downward, we call it downward trend or downtrend. Do you get it? So indicator can tell you that, okay, the market is going up, you should be looking forward to buying. You know, when you buy, when the market, you're anticipating the market is going up, and we sell when you anticipate is going down. And also it can tell you potential entry and exit points. Aside from that, I can tell you when the market is overbought, like the market is full, just like a little child has been eating, has gotten to the limit, you can't take anything anymore. You just know this child is taking any single thing, he is going to vomit all the food. Do you get it? So when the market is overbought, like it has gotten to the peak of the buyers have been buying and buying, that's gotten to the peak, any little thing is going to fall, is going to sell, or the market has been oversold. It can also show you that, okay, this market has been oversold, it's not the right time for you to keep on selling, because most of the sellers have sold and sold and sold. It's time for you to buy. So we have popular Forex, we have a lot of Forex indicators, and I just select this theory for newbies because these are the indicators that I use. We have a lot of them, and majority of them are complicated, they are complex, they don't make you money. Let me just put it that way. But this one I select based on my own knowledge and based on my own research. They can make you money. Do you get it? Because I've used them. I even coded some of them into strategies, which I'm still going to do in my next video. I'm going to show you some strategies which I've coded and what they are doing. So let me just put it that way. So the first one, we call it moving average. So moving average, or MA, you can call it MA, moving average. You see, MA means moving average. So from the word moving average, so you just calculate the average past price. Do you get it? Just to calculate the average past price, just to calculate it and use it to plot, like it's more or less like a graph. I will show you in the next slide. So to draw the line, so we have different types. We have the exponential, we have the simple, we have the we have the smooth, we have, I think we have linear weight or thereabout. But the most popular ones are the simple and the exponential moving average. So, and also we have relative strength index. This one is like my favorite. These two are my favorite. So I love them. I've used them, I'm still using them, and they are very good. They can make you money. There's a strategy I'm going to show you in my next video with RSI that can make you more than 100% return in a year. So I'm going to show you that. So measures the momentum to identify when the market is overbought or oversold. That's what RSI does. And also we have the moving average, convergence and divergence. So this one tell you when the market is uptrend or downtrend. Okay, the market is not moving towards the uptrend. It can show you that. And when the market is moving towards the downtrend, it can show you that. And one thing I will also tell you is this: we don't use indicators most times. We don't use them. Like we don't use them. I'm trying to look for the right word to use. Like single-handedly. Like we don't use them. For example, you don't use only moving average. Although you can use it, but to get a better result, you always combine. You can combine this and this together. Do you get it? You can combine this and this together. You can combine the three of them together to get a good entry. So let's proceed. Okay. So understanding moving average. So as I said, we have simple moving average. It is SMA. So average close price over a chosen period. You just calculate the average close price over a chosen period. And you can see this is the moving average. This red line is the moving average. So it depends on how you want to use it. We have different type of strategy, but based on this single line I'm just showing you, this moving average, I will tell you how you can easily use this. So when the markets, when all these things you are seeing, they are called candles. When they are above this red line, that means the market is uptrend, is going up. When they are below it, the market is trending down. So let's see, maybe I can show you just little way of how people do use it. But I will definitely do a video to show you, to give you a good strategy where you can use it and make money for yourself. Okay, we have the exponential moving average. This one gives more weight to recent price. And the market react faster with this. If you want to use exponential moving average, market react faster. You might not really understand that, but the simple is more or less is very smooth. Do you get it? But it's possible you don't get, you miss out some certain market opportunities, or you don't enter early. But with the exponential moving average, you tend to enter the market early. That's why people use this. But don't worry, I will do a complex video on that. So if you are choosing the right MA for you, it depends on the kind of what are you looking for. So this MA, they have period. So maybe you can choose 10, period 10, you can choose period 50, depending on the period 10 means the past 10 candles, period 50 means the past 50 candles. Just calculate the average of them, the close price average, and just plot this red line you are seeing. Don't worry, we'll still talk about it, but just know all these things so that you'll be curious, you'll be eager. So we have RSI, relative strength index. That's the meaning. So it ranges from 0 to 100. If you look at it, here you see 0, this is 100. This is the range from 0 to 100. So when it's closer to 0, or let's say it's below 30, you can see 30. If the market is below 30, we call it the market is oversold. If the market is above 70, we say the market is overbought. So when the market is above, for example, see the market is around this place, we believe this market is overbought, so we should be expecting the market to fall. You see the market move like this and it started falling. So at this point the market is oversold. You can see it here. The market just do and started going up, went up a little. Do you get it? So a high RSI, which is above the suggested, I mentioned that overbought, and below this suggested oversold. So that's how they use it. Don't worry, I'll do a video on this. Let's proceed. So MACD is kind of complex. Let me just say that it's complex, but I'll just make it simple. So MACD has 3 components. We have the MACD line, we have the signal line, and we have MACD histogram. Most MACD that you can see only have these 2. Most of them, they have these 2. So just few of them that you can see this, but most of them has these 2, which you can easily see. So but don't worry about it. You don't need to cram all these things. You don't really need it. I'll just show you what you look for. It's just like a picture, what you can see, and make decision. So how to interpret it? It depends on how people use all these indicators in diverse ways, in different ways. Do you get it? So let me tell you how to use the MACD. So I said the histogram, you can see, but let me just go there to show you how you can use it. Okay, this is MACD, for instance. So this is the MACD histogram, this white. You can see histogram. So this is the signal, this red is the signal line. So it depends on how you want to use it. So some people use it this way. Anytime the market MACD cross below, you can see MACD has midline, which is 0.0000. So this part, the below part, is negative. This part is positive. So you can see this is minus 0.00 something. This is 0.00. So this one is positive. Above is positive, below is negative. So anytime the MACD histogram form below, which is the negative, below the 0, we're expecting the market to start selling. So people can enter sell when the market push, maybe just created 1 or 2. 1, 2. Buyer seller can start selling, just open a sell position. That's how they use it. And when it cross above, just create 1, 2 again. Buyers will enter the market and start buying. That okay, the market is trending, it's going up. So that's how they use it. They don't use, some people don't use this at all. Meanwhile, some people, this is the only thing they use there. How do they do it? Good. When this red line cross below this midline, like just cross below it like this, they start selling. And when they move and cross above it, they start buying. Do you get it? So you move up, cross below it, they sell. When you go above, they buy. So it's as simple as that. That's how they use the MACD. And I believe I'll still do a video of this. I believe I should do MACD. I should do a video of MACD. But I believe my next video should be on RSI, which there's a particular strategy that I would love to teach you that can give you a lot of money. So additional tips for traders, if you are watching this video, don't rely solely on one indicator. It seems I mentioned it. Indicators are very helpful tools, but they shouldn't be your only decision making factor. Combine them with other indicators, with technicals and fundamentals. before you make decision. Do you get it? And also, before you start with a demo account to practice. Do you get? And also manage your risk. Risk management is very important in trading. So, and also stay disciplined. Let me give you an example of stay disciplined. Let me see, maybe I can show you something. Good. So, for example, a particular trader. Okay, good. I can see this. Let's say your strategy is when you can see MACD histogram creating theory bars before you make decision whether to buy or sell. For example, if it is sell, you need to create 1, 2, 3. That's your strategy. When it's theory, that's when you buy. Do you get it? When it's theory above 2, 1, 2, 3, just create theory. That's when you buy. When you create below, that's when you sell. Do you get it? And because you are eager, you've been waiting, you've not seen any opportunity. See this place. MACD was below and you just create 1, 2. Some people will just enter buy here, like, eager, let me quickly buy. It's buying, is already showing 2. They won't wait for the third line to reflect before. Do you get what I'm saying? For the buy. Before you know it, the market will go against them, they will lose money. Do you understand? So that's why I said discipline in trading is very, very important. And the discipline I'm talking about is different from the kind of discipline you are thinking you have right now. When you hit the market, you realize that you think you are disciplined, but you are not actually disciplined. So you just have to work on yourself, discipline yourself. And that is why we just focus on auto trading. If you don't have that kind of discipline, just don't stress yourself. Focus on auto trading. So I believe you've been able to learn 1 or 2 things. Sorry for the videos I've not been doing, because some people have been reaching out to me that why am I not doing videos there? They want my videos. So sorry for not doing videos like for a while now. I've been so busy. So thank you for watching this video, and just to encourage me, don't hesitate to give a thumbs up and subscribe to this channel. So whenever I drop another video, you will be the first to get it. And I look forward to working together with you. And the goal of Forex Solution Academy is not just to build traders. The goal is to build fund managers, people that can manage fund for individuals, for high net worth individuals. So that's the goal, and to be able to make good profit from this market. So till my next video, I say bye for now. Thank you for your time. Bye.